Good morning, everyone, and welcome to this morning's webinar. I was just slightly shocked that all the technology works this morning, but there we are. Anyway, thank you so much for taking the time to come and join us this morning to look at what is going on in the markets, but more specifically, the Forex market. But as you know, before we start, may I draw your attention to the disclaimer that I know you can see on your screen. As you know, trading, not just Forex trading, can be a very risky business. So please don't ever use money that you cannot afford to lose. And in fact, just before we came on air, I was just responding to someone on Twitter who'd it was a great long thread about trading and risk, and and whether in the Forex market traders suffer more than perhaps if in other markets. And to be honest, no, all new traders suffer in all markets. Primarily, and there are lots and lots of different reasons. I mean, it's those traders that we know that have bought into our methodology of volume price analysis, I know are doing well because they tell me. They email me, they send me messages on Twitter. I think I had one yesterday from someone who is in India, I think, who's trading the Nifty and Indian stocks, and he's been, I think all his trades have been successful. He's on the day charts. He just sent a question about taking a trade off the shooting star. It was a shooting star, but not strictly a shooting star because it wasn't quite at the top of the trend. But it was very interesting that he was very grateful that the methodology had helped him to become a success. So I'm absolutely delighted. So, and that's what we're going to look at today. We're going to look at the Forex market, VPA, how you can apply the methodology to your chart reading, but with the Forex market. And this is another reason why maybe traders who come into this market thinking that it's just a case of looking at a chart, maybe applying a few sort of indicators and just trading against levels, as it were, but without taking into account that everything is context, and what you're seeing on the chart is in the context of what is going on in terms of fundamental news, but also what is going on in related markets. And what's interesting about the Forex market is yesterday was a great example of, in fact, sometimes the Forex market can lead in terms of what is being sold and bought in particular of particular currencies, kind of can foreshadow maybe what is coming along later on in the session. And I'll explain a little bit more as we look at some charts. But the VPA methodology, the approach, the fundamental, the related markets, it's all in the books that you can find on Amazon. And when David and I started with the Forex market, we kind of soon realized that it's a very different market from the others. It's different because you're trading one currency against another. And what we found, it made life an awful lot easier if we could actually tease apart and identify in the pair where was the money flowing? Was it flowing? Look at a pair like dollar Canadian. Was that moving because it was the dollar was moving high, or was it because it was the Canadian that was being sold? Which is why we developed these very particular indicators. As I said, they are part of what we call the currency dashboard, but you can buy them individually as well. And the best way to look at them and explain them is to actually look at them on some charts. Now I've actually got MT5. I was going to put up my MT4, but for some reason it wouldn't boot up this morning. But MT5, and the reason I use MT5 is because I do have a wider selection of time frames, as we can see here down the side. Also got NinjaTrader, but I am, for this session, I'm actually going to stick to the time frames that are on MT4 because I know MT5, there's been a great take up of it, but I don't believe the take up is as wide as as MT4. Right, so the profile that I've created here is in multiple time frames. I've got 3 of the indicators from our currency dashboard. I'm just going to move this one down here. That's it, right? Because it's really interesting. I've got the hourly. It's a chart that I use as my kind of benchmark chart, and I also like to look at it when I come and I turn my machine on and look at it in terms of just before we have the session crossovers, and one of the you can use this indicator, this is the matrix up here, in all sorts of different ways, but one of the ways I like to look at it is I have to isolate the individual currency and basically see whether the market is universally buying or selling that particular currency. And I've got the British pound here because this is the 15-minute of the CSI, and we can see here we've had some really nice moves in the British pound. We're coming up to the London Open. Obviously it's very overextended on the 15. We have all the usual hoo-ha with the Open, with these session crossovers. There's all sorts of tricks played, and traders trapped in on the wrong side of the market. And this is another thing with forex, is that this not being aware of the shifts that can happen in the flows as you come up to a new session, because this market is marketed as 24 hours, which it is. You can access it at any time, which you can, and you can place a trade at any time, which you can. But you have to be aware it is actually three very distinct markets, if you like, with different participants, with different fundamental news, with different views about sentiment. Now, some of that sentiment can carry through from one financial center to the other. Wall Street tends to be the leader of the pack in this. So whatever happens in Wall Street, you can be pretty sure is going to be picked up in Asia. And then by the time London comes along and Europe, that can often be diluted, so you get a completely different picture. And we know what that picture is, even without looking at the charts that we have over here at investing.com. And I can assure you, I didn't set this up, did I, David? And in fact, this was the oil post that I did yesterday, and investing.com have very kindly put me on their front page, which is very nice. Now, although it's oil, there's some really nice VPA lessons there. So if you've got time to hop over either to investing.com or to my personal blog, annacooling.com, as I said, it's got some really nice VPA lessons, particularly the part of VPA that is support and resistance. The oil price is very, very interesting from that perspective. But the reason to coming over to investing.com is to see what the sentiment, what the mood of the market is at the moment. Now, we know yesterday, we see here the Dow Jones, it was actually down almost 1,000 points at one time, but it did actually start to come back, and some buying came in, but it was down 650. But at the moment, market sentiment has decided that, well, yes, yesterday was it was awfully interesting, primarily driven by news of the increasing numbers of cases of coronavirus, which is now sort of spooking the market a little bit, in the sense that, well, if more and more people are coming down with it, not necessarily, thank God, perhaps dying in the numbers that they did back in March and April, but nevertheless, you have a lot of people sick. Are the economies going to, be able to recover? They're not going to be able to recover as quickly as possible. So this is what we have. So this morning, clearly, the view is maybe, things aren't quite so bad. But this was the view yesterday morning. So yesterday morning, those of you who were trading, the indices were up. They weren't up hugely. The NASDAQ was up as well, but they were generally up. But when we went over to the CSI, I remember looking at it. I'm not sure it's going to appear on this one at the moment. It's a little bit, you'll have to take my word for it, but essentially the currencies that would normally reflect that mood, if you like, that sentiment, namely the Aussie, the New Zealand, they weren't responding. They were not being bought aggressively. They were kind of, I think Aussie was meandering along. The yen in particular, that wasn't being sold, which is what you would expect. And you look at it and you kind of think, well, that's a bit odd. But just bear in mind that occasionally, as I said, the currencies can foreshadow what may happen coming along the line. And one of the currency pairs that we use for proxy, which is the CAD yen, it's the Aussie yen, the CAD yen, the New Zealand yen. In fact, any of the yen crosses, if you like, they are a great proxy for risk, as it were. So this is the session, if you like, here. I'm using NinjaTrader because the timestamp matches the actual time of the market, as it were. Unlike MT45, you've got to take a couple of hours off usually. So we look at the CAD yen, and yesterday morning they were moving quite nicely, weren't they? The indices in the morning, David. Yeah, they were moving very nicely. I think, oh, you know, perhaps there's going to be a stimulus deal. Perhaps, you know, there are earnings coming through this week. This is a big week for news, not necessarily for the forex market, but again, these related markets. So this is the price action in the CAD yen, and you can see here on the 15-minute chart, it basically wasn't going anywhere. This was from 7 o'clock in the morning. It was still carrying on. You know, the prime. This is the trend monitor. We have. It was kind of going nowhere, drifting lower. And as we can see here, around the volume point of control, there was a sort of an attempt to rise at 12 o'clock, finally picking up the somewhat more positive, you know, sentiment as shown by the indices. But if you look at your anomalies here, as I've pointed out, it was an attempt to rise. This is the candle, which is the real giveaway. You've got this enormous candle at a period when it's a deep liquidity. You have to remember Europe, London, there are a lot of traders out there. So you have this big candle and you look at the volume underneath it, it really doesn't reflect that range of movement. And this is another factor, so many factors I could go on about Forex is, you know, the liquidity when pairs are likely to move, when currencies are likely to move, they you know, the focus on different pairs and currencies does shift depending on the session in question. So that was an anomalous candle, didn't go very far, came back to the volume point of control. And then if you look here, this is 2 o'clock. The 2:30. When I talk about sessions, the US session, and we made a point of this a few weeks ago, is you kind of have two opens in the sense that the Forex bit, if you like, of the North American session is normally about, is it 1:30 our time, London time. And when I talk about the open, there is another one, it's the cash open, which is 2:30 our time. This is when the stock market opens. Globex obviously, you know, trades 24 hours. So, and then we had this, as I said, this waterfall here reflecting this big fall that we had coming into the indices. And as I said, the Dow was down almost 1,000 points. I don't think it got to 1,000 points, but it almost got to 1,000 points. Right. Getting back to what is going on at the moment now, until we started moving towards the London session. These are the individual currencies on the hour, and really, you know, they're really pretty much bunched in the middle. So we're waiting for some strong divergence, certainly on this time frame. It doesn't mean there hasn't been movement in the faster time frames, and in fact there has. There's been, as I said, there's been a nice sell-off in the pound, and also a strong buy in, we can see here, in the dollar and also the Canadian. So they're reaching a little bit of overextension on the 15-minute. But what also told me, basically, that, you know, things were a little bit constrained on this time frame are these numbers here. We've upgraded this indicator to the extent that there's going to be a little a reference on the extremes of this indicator to tell us whether the value that is now appearing, whether that's average, below average, or above average. Because what it tells you is, it tells you, has, you know, that may be at the bottom, which is the pound CAD, but it's only minus 16.49. 20 minutes ago, it was like -8 or something. And it tells us, yes, there has been a move, but for this time frame, it's not very much. So it kind of, again, it's another bit of information that you can have before you even look at a chart. So I've been looking at the pound Canadian. Let me go and have a look at it here. In fact, I've had it. Have I had it on the, let's have a look. Where are we? Yeah, let's have a look on the daily. No, in fact, I think, if you've got cable, David, you were looking at cable, or which pound pair are you looking at? I think the pound is the, yes, in fact, right, David's got the majors. Right, the reason for the pound CAD was this. Here we are. This is the reversal. As I said, this is what you get at the open. You don't always get it, but unless you know that you can get this dramatic shift in sentiment at the open, traders can be caught out quite badly. But there's a very nice little VPA lesson on here. Well, there's a couple of lessons on here. First of all, okay, this is the 10-minute chart on pound cable. We have the break lower, as we saw on the 15-minute chart of the CSI. There was obviously a strong sell in the British pound. We had this nice down candle here. Did actually trigger the volatility candle, which is where this piece of price action is outside of the average true range, and you then get a retrace into the spread of the candle, and you think, okay, well, that's gone down. Is that retrace? Is this move back into the spread? Let's move it down. Is that going to be a reversal, or is it just simply a pullback? And this is where your VPA can come in. You look at the two candles here, and you look at the volume underneath it, and that is such a classic case of, yeah, that's down, there's a pullback, and there's no volume to support that, and then we carry on lower. Now, because we're coming up to the London Open, there's a nice lot of volume underneath it, and this is what I mean. This piece of price action is great. You think, oh, great, it's going to carry on lower. Then we have this it looks like a doji candle, and you think, oh, looking at all the way this is set up from the break and the candle patterns, you could say, well, this is going to carry on lower, but because you have to see the price action in the context of the session that it is being traded, and I know sometimes I sound as though I'm laboring the point, but I can't make it strongly enough, because these points in the trading day, these crossover sessions, it's where so many traders can get caught out, and caught out quite badly. Moving to a Renko version of the price action that we saw on the chart, as I said, this is the break lower that we saw on the time chart, which is the S3. Just double check that here. There we are. This is the S3 that we're seeing. And what a Renko chart is, gives you a much more geometric look of the price action. And we can see the congestion prior to the break lower. This is the S3. It's smoother. You don't get all the noise, if you like, that is of the price action. This is the pullback that we saw on the time chart, and we can see here what these are the indicators that we have developed, where we have the trend dot, which is very close to the price action. Obviously, this was the bounce off. This is actually a support area as well. It did turn green, it did turn blue, but the trend monitor stayed relentlessly red. But we know that wasn't going to go very far, because our VPA told us on the time chart, and then it carried on lower. And this is the price action that we are seeing at the moment. This is as I said, this is coming up to London, as we can see here. And what's going to happen now? Is it actually a reversal because we're into London, or are we just going to go sideways and maybe carry on in, if we call that the primary trend lower from the break from the S3? It's actually a sort of continuous sort of drift lower right back here onto from the S1. My opinion, you really need to wait and see. If you're not in a position at at the London Open, then I would suggest you wait. If you are in a position coming up to the London Open, then how you play it is pretty much up. You've got to decide if you've got multiples and you're in profit, maybe take some off and see what happens, because occasionally they do carry on in the original direction, but you can't guarantee that. So that's my CAD, that's my pound Canadian. Let's have a look on cable. I know David's got the, there we are. Yes, and also to give you an example, when I said, you know, the values on the matrix for the British pound, this is on the hourly chart, and they were very low. What it's reflecting, if you actually look at the daily chart, this is cable, can you see it's very, very narrow price action? It's very small. So that is why those numbers are low. So the indicators will give you all sorts of information in terms of what is being sold, what is being bought, but also how strongly that is being bought or sold. Then it goes on to the pairs with the matrix, and then it takes it one step further in the sense that it also tells you, or actually, if you look at the pound, the strongest move in the pound has actually been the pound Canadian, because you look at these values. So if you were a trader who is simply looking for a trading opportunity and you weren't necessarily trading a specific set of pairs, that would tell you that at the moment, certainly with a cable, yeah, you know, cable is being sold, but your setup, you may have to perhaps wait a little longer. And what happens as the session moves on, you do get a rotation. So for example, if the pound has been sold quite heavily against the Canadian and it's been a half decent move, that will come to a pause point because of support and resistance, all sorts of other reasons. But the market still wants to sell the British pound. Well, maybe that's when cable will come into its own, and you will see that because this number will increase. So we've got minus 14 at the moment, but generally speaking, as a view of the market in general, these are quite low numbers for the hourly chart, and certainly for the time that we are trading. Right, that's what I'm going to say. I'm going to pass over to David. I've had a couple of questions in via email and in our forum that we have for our forex students on chart setups. So I'll come back to that later, but let me just pass through to David and see what's what with the British pound. It's quite interesting actually here on the 15-minute the CSI. You can see here this was the little bit of it looked like it was going to, you know, maybe want to reverse, and now it's been given another push lower, which happens. Overbought and oversold. States are being overbought and oversold. You do have to bear in mind currencies can stay there for an awful long time. And looking at what's happening on the hour, we see that the pound looks sort of turning down at the moment. Not a lot of news for the pound, but obviously it's all to do with Brexit.